What's up, guys? JD here, and on today's show, I am talking with Jordan Harmon, president and co founder of Angel Studios. Now, Angel Studios is one of the largest independent studios in the world, and they actually got their start in a really unlikely way. They got sued by Disney, almost put out of business, but ended up being saved by their fans, and they've gone on to do some unbelievable things. They had one of the biggest movies of the year last summer in 2023, Sound of Freedom. We're going to talk about what it's like to get sued by a big company, what it's like to accidentally make a $250 million movie. We're going to get into the weeds. You guys are going to love this episode. I did. That's coming up in just a sec. Before we get to it, if you're new here, my name's Jon Davids. I'm the author of this book right here, Marketing Superpowers. Build a brand so good that getting customers feels like magic. If you got a business, you want to grow that business, make sure to get Marketing Superpowers. Get your free chapter at marketingsuperpowersbook.com. And of course, you can follow me across social at Jon Davids. If you like the show, all I ask is that you subscribe, follow, and tell your friends. And now, let's get to my conversation with Jordan Harmon. All right, Jordan, welcome to the show. So let me ask you a question. I've done my research, and from all I can tell, your business, the movie making, TV making world, has about an 80% failure rate. Is that true? And if so, who is crazy enough to do this?
Yeah, it's actually worse than that. So it's 80% on films that do theatrical releases, but there's a lot of films and independent films and TV shows. The Netflix CEO recently said that 1 in every 99 TV shows is canceled after the first season because it just can't succeed. There's a lot of reasons for that, and that's what Angel's actually trying to fix. Because there isn't actually a revenue issue inside of the entertainment space. There isn't a business model issue. There's an incentive alignment issue that's causing for both the distributors, the studios, and the producers to have poor alignment between the two of them, and it's causing for massive failure across the industry. So if you fix some of these core problems inside the industry, you find that your hit rate goes up drastically, but you have to be able to be disciplined on it.
So let's dig into that. When you talk about a broken incentive model and a broken kind of industry structure, what do you mean by that?
So a broken incentive model, back in the day, distribution was a lot more expensive than it is today, meaning you had to have a massive amount of infrastructure to be able to actually distribute your films throughout the world. You would print out these reels that were super expensive. You would, they call it P&A, prints and advertising. They would spend millions and millions of dollars. And so in order to mitigate their risk on releasing something theatrically, they created what was a distribution fee. So the distribution fee would be 30% off the top. So every dollar that came in, 30% of that goes right to the distributor to kind of mitigate their risk because they're taking on a lot of risk. And that was kind of needed back in that, in the golden era of film and television. But over time, the cost of distribution has consistently gotten less and less expensive, but they didn't change their model or their incentive structure. And so it got to the place where producers started realizing that distributors would take their 30% off the top. Then they would take a 15%, what they call an ad overhead fee, which is basically saying, hey, if we go spend $100 million to market your film, we're going to take a 15% ad overhead fee for managing that marketing, which is a little bit crazy. And then they would take out all their distribution costs for distributing the film. And so, these big studios, Disney, Universal, you would get to the bottom of the waterfall, the revenue waterfall, and there was nothing left over. And so producers started saying, if I'm never going to make any money on the back end of this film's life cycle, then I need to hike up all my production fees so that I can make as much money as physically possible while producing the film. And it wasn't a function of like them being like maniacal or evil, be like, we're going to hike up they're just saying it's a feast or famine industry. I got to make hay while the sun's shining. So I'm going to try to get as much as I can out of the actual production fees. And over time, you had distributors with their accounting padding more and more of their distribution waterfalls to where it was more and more difficult to make any money on the back end, and producers padding their production fees to where now we're in 2024 and you've got episodes of TV show costing 15 to 20 million dollars an episode, which is absolutely bonkers. And so, but it's just because they know they'll never get a back end. And so you have this massively inflated bubble around the production costs and the distribution costs. Neither parties likes each other. They're not aligned whatsoever. And then Netflix came in and said, we're actually going to pivot this model and be a little bit more transparent about everything. We're just going to do what's called cost plus. So basically, they did their cost plus 20% on top of their production fees. And so producers loved this at the beginning because they were like, oh, well, it's really clean cut. I have my cost for producing the show or the film, and I get 20% on top of that. The problem is, and if you know the history of like SpaceX and Boeing and their battles during this, kind of the space exploration world, Boeing had been kind of inflating in horrible ways the entire space travel industry because they were on these cost plus models with government contracts. And it just inflated the cost because there was no incentive to keep the cost down and to innovate. SpaceX comes in and says, we're not going to do that structure. We're going to go get the contracts. We're going to perform efficiently. And then we're going to get, basically an incredible revenue opportunity on the back end of this. And they just completely disrupted the space industry. Now 90% of payloads by next year, based on Elon's most recent posts on X, are going to be from SpaceX. And so he's completely flipped that industry on its head. So Netflix, when they did that, that's not a great model, but the old model was so broken that everybody's like, this is a great model. And so they kind of went into this 10-year fluffy era of streaming where all the streamers started doing this cost plus, and now you have everything kind of crashing to the ground. And so that's the history of why it's a problem. And we can get into Angel's solution as we go along, but that is the core crux of, it's like literally me coming to you to start a startup and say, hey, man, I've got this incredible idea. It's going to change the world. You need to be a part of it. And John, why don't you invest in my idea? It's going to be $100 million to invest in it. And you're like, okay, cool. What's that going to get me? You're like, well, I'm going to spend all that on just me and my team and what we're doing. And then all of a sudden you're like, as an investor, you're just like, wait a minute, this doesn't make any sense at all. So no, if the industry could get back to the roots of innovation and actually scrappiness to where you're actually having your money hit the screen, the failure rate that we're seeing today would completely reverse.
It's so funny the way you describe it and the detail with which you get into it. I've been to all of the Hollywood lots of all the big studios, and all I can say is when the chauffeurs have executive assistants, there's excess cash. There's excess cash flowing around, man, because that's what it's like. You walk in and you're like, I don't understand what does this room of people do? And there's just no good explanation. And I think you're right. You come from a world where you're just getting fat off of fees, and I don't even know where the fees go. They just get dividended out. And then, you come from my world, which is like the scrappy startup world. And it's like, guys, we have $100,000 to do everything. Like that, no one gets a fee. We get profit at the end of the day if there's a profit. And
in the startup world, it's like I don't even get a salary.
Right.
You're just living off of Top Ramen for like 12 months.
Exactly. So you guys have been in the game, I think, since 2016, right? And
so 2012, 13 was when we actually started the company.
Okay.
4 brothers and a cousin. And it was originally called VidAngel. And the idea was to build an audience large enough that we could then launch into original content. And so we built that company, and it was excelling. And then we got a fat lawsuit from Disney, Warner Brothers, 20th Century Fox. And the premise of that company was we wanted to give parents a technology that allowed them to skip and mute anything that they found objectionable inside of content, films and TV shows. And the studios didn't love that. And so when we got sued, we ended up pivoting to our original plan, which was to build up a large audience and then do original content. But we had to pivot to it earlier than we were expecting. And 2016 was when we made that pivot to original content to actually go and solve the studio business. So that's when the studio started, the official studio. But from 2013, when we originally started the company, this was kind of the end goal.
And was your path in, because you guys have a very specific niche today and you're super successful, was your path in coming in from the we want to build a faith-based company, or we want to just have an alternative and it just so happens that faith is the alternative? Like what was the or was it purely entrepreneurial where it's just like we want to find an industry and break it and rebuild it? What was your actual motivation?
Yeah. So if you've read The Innovator's Dilemma, there's these beautiful principles around disruption where you go and serve these underserved markets in really meaningful ways. And so for us, there in the entertainment space, the entertainment space has done a really good job of creating this false dichotomy around faith-based content as a niche product, when in reality, 95% of the world is faith leaning. And so when you think about that in that context, 95% of stories should have some element of faith in them. What we wanted to do is we wanted to create the same quality of storytelling that everybody else was doing, but do it with the values that represented what we felt was good for the world and for our families. We all have kids. And so that's kind of the framework that we were looking at it in. And it wasn't like we're going to go make a faith studio, and we don't even consider ourselves a quote unquote faith studio. We'd say we're an American independent studio who happens to be faith friendly, and we allow that type of content to absolutely. We want it to live on our environment, and we believe that if you let the audience guide you, you will have 95% of your stories have elements of faith integrated into them. But unlike a lot of faith-based studios that have kind of done a really poor job of cheesy storytelling, we want to do it extremely compelling. And two, we don't want it to be in your face, right? Just like a lot of people have been rejecting Hollywood with the propaganda that they're shoving into their stories. The same goes for, faith or Christian type content where you get someone that's more of a sermon and less of an entertainment movie. And so that was, really important to us, is to make sure that this was on par with anything that the mainstream entertainment studios were doing, the large studios. But it wasn't really a goal of faith-based. Our mission is to tell stories that amplify light, which is a much more broad term in terms of how we position the content.
So last summer, 2023, obviously Barbie, Oppenheimer, big names, but the third, I believe, highest grossing film was Sound of Freedom, right?
It was actually the number one search film, and it was in the top 10 for domestic releases. But for the summer, yeah, it was definitely up there. But it took on a life of its own for sure.
It did. And just so people know, I mean, people will probably know if you don't, just search up Sound of Freedom. I believe it's like number 4 or 3 on all-time independent films. I don't know if you have that stat, but that's what I'm just looking up on the numbers. So can you talk a bit about the background, kind of how that came to be and how and when you guys got involved?
Yeah. Man, that's an interesting story. There's a lot that goes into that story. So do you want the short version or
give me the short version and we'll pick it apart.
Yeah. So basically, we had launched a theatrical division with His Only Son, which was a film about Abraham and Isaac in 2013, the spring of 2013. And leading up to that film, we had known about the Sound of Freedom movie for a long time. But as far as we were concerned, Warner Brothers had originally greenlit it. We knew that Disney bought it, and it had something had happened with that, but it apparently had gotten shelved. And then the producers finally got it out of Disney, and were trying to find a path to distribution. And so we connected with them. I want to say March of 2023, and basically, Angel has a very unique process. And I'm actually going to step just one more step back so that you can understand why we would even go embark on this, because that was a heavy film. Angel, like I said earlier, we wanted to create an incentive structure that solves for the Hollywood issue. And so we've removed all distribution fees, all the ad overhead fees. We have an incentive structure where we don't make any margin on distributing and marketing the project. We make margin when we both win together with our producing partners. And what the reason we can do that and we can make that bet is we have what's called the Angel Guild. So we've built what's called the Angel Guild, which is a community of over 360,000 people and growing very rapidly of our super fans. These are members. This community, a lot of them are paying annual and monthly memberships at $20 a month. And so these people are really, really diehard fans. but they are more than just the people who help us fund the content and fund what we're doing. They actually help us pick what we distribute and get out into the world as a studio. And so every film and TV show, before it ever can go onto the Angel Studios platform or that we ever release theatrically, has to first get greenlit by the Angel Guild, the community. Now, we take a random sampling and we get to statistical significance, and there's a lot of nuance there in terms of our formula. But the beautiful part about that is we know that the audience already loves the product. We're not guessing. We know what they love. And so we can remove all those fees like the other studios have and just focus on getting to worrying about the last dollar. And it allows for the producers to go, well, I know with Angel, I'm actually going to get a back end if there is one. I mean, if we win, we'll win together. And so I'm going to keep all my production fees really tight so that when I produce a $10 million movie, it looks like a $50 million movie. Or when I produce a $5 million film, it looks like a $25 million film or a 50, And so with Sound of Freedom, they submitted, we asked them to submit to the Guild. They submitted to the Guild and the Guild went, this is off the charts. Like they just loved it. And so everybody's like, should we distribute this? It's child sex trafficking. No one wants to watch a movie about that. That's a crazy idea. But for us, it was the no-brainer. The Guild said they wanted it. Now we have built a business model on base hits. And what I mean by that is we haven't built a business model on trying to find the next Sound of Freedom. That's actually not our goal at all. Our goal is to have consistent base hits where we spend meticulously and measurably our marketing dollars, our P&A, to release these theatrical films. And then between the theatrical release and the Angel Guild and the Angel app and our licensing partners and all the 10-year ultimate is what they call it of the revenue for a project, we can make lots of profits from it. But if we have a breakout hit, we also have the infrastructure to go scale into it. But it doesn't matter if we do or not. So we go and we decide, let's go take this out. And within 5 days, we had gotten a distribution agreement with Sound of Freedom team. And to be honest, that if anybody knows this industry, 5 days to lock in a worldwide rights distribution deal is absolutely a miracle. There's just I don't know if I'll ever see that again. It's remarkable. And so and then it was a function of like selecting a date. And first we were thinking October, September, and we had some members of the team who felt strongly that we should go earlier. And some of them had even really meaningful experiences around like, we feel like we should go earlier. And so we started dabbling around with the idea of July 4th. And we had consultants and people who were like, we're out. You guys go July 4th. We're out. Like you're going there to die. All the big studios pay hundreds of millions of dollars, really billions of dollars across all of them to go for those July dates and June dates. And so they just said, we're not going to be a part of that. And, but we felt strongly that we had a movement that we could rally behind July 4th, with it being Independence Day and trying to get independence for these children who are being trafficked around the world. And so we went for it. And within 3 months, less than 3 months, we put together an entire campaign around this film. And it just took on a life of its own and did over $250 million in the box office, which, again, we're not building our model for that. I could actually care less if Angel has another Sound of Freedom, because we have a sustainable business model for base hits. The World Series is won by base hits. It's not won by home runs. And so that's the key to our model.
It kind of reminds me, and I don't know if you guys had any inspiration from here, but Relativity Media, Ryan Kavanaugh's company, which I don't think is around anymore, but when I heard him talking about it years ago, it was like every studio is built on the VC model, which is like 9 out of 10 things are going to fail, but the one will carry the whole fund. And movies were kind of the same, as you were talking about at the beginning. Is that sort of what you're going for? And my question there is, does it actually work?
Yeah, so we're going to flip that pendulum on its head. So if you look at our track record, because the Angel Guild is helping us select the winners, Dry Bar Comedy, our first original series. It's the largest library of stand-up comedy, gets over 1 billion views a year. It's now very profitable. It's paid back all the original investors. The Chosen, it's paid back all its original investors. It's become a smash hit. Tuttle Twins TV show, which is a TV show about freedom and economics for kids. It's now in its 3rd season, and it looks like by the end of this year, it'll be cash flowing as well. And then you look at the films. His Only Sons paid back its investors. Sound of Freedom's paid back its investors. After Death, which we launched, looks like it's on pace to pay back its investors. The Shift's on pace to pay back its investors. So we're hitting at a really high average, and it's a function of knowing how much you should be budgeting for a film, and making sure that the audience is resonating with it, and then just spending methodically and carefully based on data-driven decisions. And obviously our background is more marketing, with our background with marketing and Harmon Brothers and in commercials and whatnot. But that being said, it's we believe now whether we're going to flip it completely on its head and have 90% success and 10% failure, I don't know if it's going to go that far, but we are flipping that pendulum on its head where that success rate is changing drastically.
And then even when something doesn't work, probably it doesn't do that much damage. Like you guys can absorb the losses, I imagine.
Yes, that's exactly right.
So what's your relationship like? I want to go back to this July 4th, 2023 weekend. You guys come out. I think I heard somewhere that you were either bigger. I think you were bigger out of the gate versus Mission Impossible and Indiana Jones came out the same weekend, or, in the same ballpark. And so when that happens, are you getting like angry phone calls from Disney and from UTA? Like, what's your relationship like with Hollywood proper? Because I'd imagine you guys are kind of a cockroach that is just kind of a thorn in their side.
Yeah. Cockroach is a good analogy probably for them, is they just be like, oh my goodness, these guys will not die. Because they obviously, for those who know our history, they sued us for 4.5 years and we settled, and, we're just grateful to be alive. That was a win for us. And so I heard someone say, who actually is a financial advisor for a lot of the head executives of some of these major studios. He said, I was in a meeting and they were saying there's not an executive meeting that goes by where they're not talking about Angel, or they're like, what do we do about this? So that's like good and bad. It's great that that we've got their attention. It's bad that we've got their attention. So it's just one of those things where, we'll just continue to roll with the punches. But, it definitely, it's really hard when for industries when they're getting disrupted, especially when it's true disruption, which means that you're building and vertically integrating in a way where they can't stop you, right? That is a very, very difficult paradigm to be in when you're being disrupted. When you're the disruptor, it's fantastic because you're building business models that allow you to sustain regardless of support of traditional entertainment or traditional, the industry that you're in. And so I would imagine, based off of the conversations I've had with people who are in the industry, it's definitely ruffling feathers, but it's needed. Like, it is a healthy dynamic for industries to have disruption, especially when they get fat and happy. And it's important that you create an environment for innovation.
What's your relationship like with the kind of Hollywood, forget the studios, but like actors, producers, directors? Do they like you? Are they maybe afraid to get into bed with you because they might piss off, the other folks they're working with? Are you okay working with those guys?
Yeah, it's been interesting. I thought when we got started that all the people who would want to work with us would be the independent filmmakers who have been out in the cold for a really long time. It actually hasn't been them as much. Some of them do. But the ones who are really gung-ho about Angel are the ones who have done big industry projects, like Alejandro and Leo and Eduardo and Chet and Fletch, who are show running a couple of TV shows for us. They've all been in the industry at executive levels in some way, shape, or form, or have produced big productions for the industry, and they're just tired of it. I mean, they're so tired of this experience of feeling like you work, and there's just no end in sight. And so when we think over time, there will become more and more desire for even bigger name people to come work with Angel, because they're going to look at it and say, if I want to make the most amount of money and get the most amount of impact and reach with my stories, I need to go through Angel. And so that'll happen over time. But the way we do that is by educating them and saying, hey, here's how we actually pay out to producing partners. We did this with both The Chosen and Sound of Freedom, where we actually put a blog post up that shows every dollar that was collected, how much was paid in marketing, how much was paid in distribution costs, how much we paid to them, how much Angel made, so that there was clear transparency. And when we submitted the Sound of Freedom one to deadline, they were like, why do you want to post these numbers? And we're like, because we want the industry to know that we're going to be transparent, we're going to be honest, and we're going to win with that type of model. and it is turning heads and starting to move even more and more people into our space. But the independent people, they still have like this idea of grandeur in Hollywood that they're clinging on to. So they actually haven't been as much flocking to it as much as people who actually understand the industry really well and have worked in it.
Yeah, this is a business where they very much live by where there's mystery, there's margin, and they trade on secrecy. And there's a part of that I think is kind of the glamour and the allure that they're trying to put out there. But a lot of it also is like they maybe feel like they're just one failure away from going out of business. Like, unless
Yep.
you're Disney or Universal, it is a feast or famine business. So talking about your numbers, so the numbers that I saw, 2022 revenues of 77 million. 2023 revenues of over 200 million. Can you talk a little bit? I know you're very transparent about this stuff. Can you talk a little bit about like who gets paid, how you guys get paid, and maybe also just a bit about the model? Like you said, you're going for base hits. So what is
Yeah.
the unit economics of like just a good project for you?
Yeah, I think it's good to just break it down from a waterfall perspective. So the waterfall there's only really two segments of the waterfall for revenues with Angel. And we kept it really simple because we didn't want people to be like, oh, well, you make way more money in XYZ things, and that's why you push those particular channels. And we make less money here. And so we try to keep it as standardized as possible. So for the revenue waterfall, we literally just take 25% of revenue for marketing. So if we go do a theatrical release, we'll take 25% of our projected box office, and that can scale up and down based on the projections that we're seeing with pre-sales and different metrics. And that allows us to spend into marketing the theatrical release. And for a TV show, we'll take 25% of their revenues and we spend it on marketing that TV show to get that TV show out into the world. And then after that, you just take out your actual distribution expenses, your credit card fees, actual costs to distributing the project versus having margin there. And then 2/3 from theatrical goes to the producers and their investors, if it's independently financed, or their producers and anybody who invested in it, whether it's Angel or somebody else. And 1/3 goes to Angel for distribution. That comes out at the bottom of the waterfall. So if there's no bottom of the waterfall and we misspend on marketing, we're both out. We cover our general overhead out of our 1/3. We don't cover it off the top. And so it creates this beautiful incentive for us to be super efficient. And then on the other revenue stream, which is the guild revenue, there's a lot more overhead required because we have a massive engineering team of almost 100 engineers who are developing this technology and what we're doing. And so that one is 50-50 with us having 50% and the producers pool having 50% as well. And so it creates this environment where you have all the traditional windows in Hollywood. A window is basically like a revenue stream that they call a window, a time period, that for those who don't know. So, for example, after you leave theaters, you may go license to your pay one window to Amazon, where they want to go and get the post theatrical subscription video on demand. It's called the SVOD license exclusively on Amazon. We still have all those direct relationships where we're going and extracting all that value for the IP in the pay one window, pay two window. We have direct relationships with Amazon, Netflix, Peacock, you name it. And so we'll still go extract all the value in traditional windows that they've experienced. The difference is we have additional revenue opportunities that we're building internally that are completely different, like our pay it forward model. That's never existed before. People can actually pay it forward so that other people are able to go watch a movie for free in theaters. After they watch the movie, they can say, I love this. I want to pay it forward so someone else can go watch this. Our guild model is completely unique. A lot of people would go, well, it's just like Netflix subscription. Except for the difference is it's more like a YouTube where we're sharing 50% of all the profits with the actual producers. Netflix doesn't share any of those profits with producers. And so between all those different revenue streams, that waterfall is clean, clear, and concise as to what the costs are and what the splits are so that people aren't ever wondering, well, why did you go sell more merchandise than XYZ? And so it's been a fun journey, but we've now got over 100 plus partners around the globe. We've got worldwide distribution, and it's been a crazy 10 years. People are like, you're like an overnight success. It's like, yeah, 11-year overnight success. So it's been fun.
Yeah, those are some pretty long nights. So who are the investors? You talked about, I want to break out a bit of what you talked about, like actually funding these movies, 10, 15, $20 million price tags. Is this private equity? Is this high net worth individuals?
Yeah, so it's a combination of either private equity, individuals. We have a film fund called the Angel Acceleration Group that helps finance some of them as well. And so it's going to be a combination of all that creative financing. But the core principle is that producers do not pad their pockets with their production budgets. They pad their pockets with their profits. And so the beauty of that is I've had producers come in and pitch me a TV show and they're like, man, this TV show is amazing. Here's the plot. And I'm like, that sounds great. How much is it going to cost? They're like, well, I probably could do it for like $35-40 million. And I'm like, okay. And then we walk through our entire business model and we get to the end. And if they really understand, I've had people in the exact same meeting go, you know what? I think I could shoot this for $11 million. And I'm like, wow, that's amazing. You just went from 30 something million dollars to $11 million. That's the beauty of incentive alignment, is it changes to where you now have a business that, again, I always tell people, Hollywood does not, the entertainment industry does not have a revenue problem. They generate hundreds of billions of dollars. They have a spending problem.
Yeah, if you see the free cash flow of like a Discovery or any of these businesses, I mean, there's a lot of money. There's a lot of debt in some cases, and there's a lot, as you said, of frivolous spending. But there's plenty of money coming in. Can you talk a bit more also about the guild? So the Angel Guild, I think I understand it, but like, where did it come from, and what exactly is it? A revenue generator? Is it really a community like engagement tool? Like, what is it exactly?
Yes.
All the above.
So the Guild, if you've ever read the book, The Wisdom of Crowds, it speaks to the power of creating a proper sandbox and then allowing communities and crowds to actually make decisions, and that the aggregate can oftentimes, if given the proper sandbox, can make better decisions than any expert. You know, one of the examples they give in the book is Who Wants to Be a Millionaire? You know, there's the 3 lifelines back in the day, and it was, phone a friend or an expert 50-50 or ask the audience. Well, if you phone a friend or an expert, they were right 61% of the time. If you ask the audience, they were right 91% of the time. And so the beauty of this is we are basically creating an environment where anybody can go join the Guild. You can go to angel.com/guild and join anytime you want. And when you join the Guild as a member, you're able to go watch the next Sound of Freedom before it ever is known. And you can go vote on whether you think it's a meaningful project on your phone, on your TV, and you're actually going to get to peek behind the curtain of something that's either in development or just finishing production or whatever it may be. You get this peek behind to actually influence what comes to Angel Studios. And the beauty of this is we can really pretty closely predict what our audience score is going to be. We actually did some data collection this week on our audience scores, comparing with the A24s, Paramount, Disney, HBO, you name it. We have the highest audience score average on our titles by a wide margin. Ours is 94% on audience score on Rotten Tomatoes. The next best is Paramount at 84. And so the reason for that is because we're not guessing. We know what the audience wants. We already have the data. We understand what they're going to resonate with. And we do that from the early stages of development. So like we'll have someone, instead of submitting a script, they create a torch, which is like a proof of concept, a short film, a prototype. And they submit that 5-10 minutes of actual footage that they shot and produced to the Guild. And the Guild goes, yes, I want this made into a TV show or a film. Or no, this is not great. And we go from the early stages before investing millions of dollars in resources and time to actually go and make sure that the audience is resonating with the core idea. And then we do it again at the end to make sure that they honed in on the message, that they got it right, that the story arcs are done right. And so that's, the Guild is not only, a membership that helps fund the future of Angel content and films and TV shows. They get 2 free tickets to every Angel theatrical release. They get discounts on merch, and they get early access to our content. But most importantly, they get a vote and decide what comes.
That's so smart. You have this minimum viable product version of in this industry. Like, you're basically asking people if they would buy a ticket, if they would see it, if they would watch it before you ever spend $1 or much money at all on the project. So that's you're right. Never going to make something if people say no. You know that long before you filmed one scene.
And it makes us a very creator-friendly, producer-friendly studio. And that one of the things we pride ourselves on is we don't take any creative control over our producing partners. None. we tell them, and in our agreement, the only person you're responsible to is the Angel Guild. If you win them over, Angel will support you. And so we don't have to go in and try to take Final Cut or different type of, creative control to manipulate how it's supposed to be. Now we collaborate with them and say, hey, this might score better if you do X, Y, Z or do this or that. But the beauty of it is they know how they're scoring when they go to the guild, and they're just iterating and trying to figure out how to get that product right. I remember having a director come in on their first cut, and they submitted the film, and they said, it's done. And I said, well, let's see what the guild says. And it didn't pass. And he was like, man, he's like, I didn't realize it was going to be so that off. And he had to go through over a dozen cuts to get the film right. But when he did, the audience loved it, and it's been awesome.
And how do you market movies these days? I mean, you do it for a lot cheaper. Are you buying billboards? Are you doing PR campaigns? Like, how do you actually get the word out for a movie in 2024?
Yeah, I mean, obviously the real intricacies of our marketing, I can't go over in a podcast, but the reality is it's just taking the principles of our background in direct consumer marketing. If you look at, I started a company called Cove, which was a DIY home security company that we built into a $100 million company. And then my brother started a company called Harmon Brothers, which did like the Squatty Potty commercial and Poopery. And so we have this background in direct response marketing. And so it's really taking those principles and just translating them over to the entertainment space. And so it's not crazy complicated. It's just discipline, hard work, and trial and error through, significant A/B testing. But the traditional studios don't operate that way. They got a $50 million budget. They're going to go spend $50 million, and 70% of that's going to be on billboards, and they'll see on opening day if it's stuck. That's just not a good model.
Yeah, I mean, the minute you said D2C, you had me. When you come from that world of rigorous marketing where every dollar has to make $1 or has to make $1.50, it's a whole different psychology from let's put up billboards on, Ventura Boulevard and see if people,
That's right.
show up at the movies. That's awesome. So what kind of team do you have? You mentioned 100 engineers. Like, is this a really big company? Are you guys running lean?
Yeah, so we're definitely in growth mode right now. Like, we are very intentionally in growth mode. We've got over 200 employees, and in comparison, the studios that are doing similar amount of titles and what we're doing in terms of our releases are in the thousands of employees. So yes, we're running lean compared to Hollywood, but we are scaling our business in a very meticulous and an important way, because there's a great window of opportunity right now in terms of the industry has left this gaping hole for the family market of people who want great value-based entertainment. And Disney's left that hole wide open, and it's the biggest part of the sector. It is literally the most revenue generating part of the entire entertainment industry. And so everybody's rushing towards mature content. And that's not to say that we won't have content that is heavier. Like Sound of Freedom is not a light title. It's definitely a heavier film. But the point of that is that we have a window of opportunity to go and get as much market share as possible. And so we're aggressively going after that.
Okay, so do you think the cultural polarization we have today, I mean, I heard about Sound of Freedom. I was listening to PBD, Patrick Bet-David's podcast, and he was talking about it. And I'm just wondering, like, the idea of, let's just call it faith-based programming, do you think the culture that we're in today is really conducive to this? Is this why you guys are seeing the kind of growth that you are seeing?
I mean, that's definitely a facet of why Sound of Freedom blew up. There's a divisive culture. People are arguing about whether it's X or Y or Z. The reality is the more fundamental principles are deeper than that. And it just has to do with telling really good stories. People from the beginning of time have connected with deep and meaningful stories in a really, really powerful way. And so as long as you're doing that and doing it in a really efficient way, and then finding an efficient way to distribute it to your audience, there's a business for that. And so, yes, the Sound of Freedom effect, which was, blowing up into massive, box office success, that had to do with a cultural time and place, and was 100% a contributor. And for me personally, with my religious background, I believe God wanted that to happen the way it did, because he needed that message to get out to the world so that we could have open conversations about what's happening to his children. And now you've got laws and legislation that are passing and doing meaningful things for the world. But putting that aside, Angel's success is far more predicated on not the blockbusters, but the base hits, and around just really good, compelling storytelling and efficient distribution. So that's been the core of the success.
Who do you think you guys compete with? I mean, I'm thinking like Daily Wire now they're investing a lot in movies, and I've heard them talk about the idea of taking on Disney, doing the same stories with a different twist. Do you look at them? Do you look at others?
Um, it's interesting. I get asked that all the time. And technically, the whole industry in some way, shape, or form has some competitive mechanisms, but we're really good friends with the guys at the Daily Wire. Ben and Jeremy Boring and their CEO Caleb. We're very good friends with them. We have a great working relationship. Yes, there's competitive elements to it, but I don't really wake up in the morning thinking about Disney or Daily Wire or anybody else. I'm thinking about how do we provide the best service to our customers, because that's the core of our business and our culture, and that'll continue to be the core of our business and our culture. And so I think as a byproduct, we've had the results that we've had. The people who spend a lot of time thinking about who's your competitor and what they're doing, sure, you need to keep an eye out in terms of innovation that's happening, but we have a very clear vision of where we're going and how we're going to get there. And so that's what's all consuming my thoughts morning and night.
Can you talk about the 5-year plan, 10-year plan? Are you heading towards an exit? Is this going to be something bigger rolled into something else?
Yeah. So we built the guild in a way where when we transition away as founders and executives, that this mission can continue on beyond us. If we were just creating, the new Hollywood system where we're the gatekeepers, it wouldn't be changing anything. It would actually just be the same problem over again with just a different worldview. And so what we've done is we're innovating that and making sure that mission's set in stone and clear. And this is very much a legacy play for us. Like, we have no desire to go and just go get a quick exit. This is the next, as long as God allows it, this is going to be the next 20, 30 years of my life. And so it has more to do with just providing a better culture and world for my children and my grandchildren, so that they can see something meaningful, incredible stories. Because I love stories. Stories are so powerful. They change your heart. They can change your mind. They can do so much, but they also can do so much evil as well. And so that to us is our motivating factor of just helping tell these stories that amplify light throughout the world, that invite and unify in a really meaningful way. And so we get that asked all the time. Are you going to exit? And it's just like, no, I mean, as long as we have anything control over that, we want this to be a very, in the next 100 years, I hope Angel's known as, the number one studio in the world for telling stories that amplify light at broad scale and having the most impact on the world doing it.
Is it family owned? Do you have a lot of outside money that actually owns equity in the parent?
That's a great question. So, there are 4 founders and our brothers and a cousin. There's 3 of us that are operating day to day now. But the business itself, we actually just survived the Disney lawsuit back in 2016, right as the Job Acts passed. We actually did what was called a Regulation A+, which allowed us to go raise money from the crowd, the community, and say, hey, you likely will lose your money, but if you want us to go fight this lawsuit, you're welcome to invest. And we had over $10 million in like 6 days or 5 days that got invested. And we put $5 million towards the lawsuit and $5 million towards launching original content. And that was kind of the start of the studio business. And so Angel, we have literally thousands of retail investors who have invested in Angel Studios. It's actually why we're currently publicly filed. We're not publicly listed, but we are publicly filed because based on Regulation A plus crowdfunding laws, once you pass a certain amount of assets for your company's value, you have to file publicly. And so on April 31st this year, we actually filed publicly. We're not publicly traded at this time, but we do have to go through the rigor of quarterly public reporting, which is, all the pain of being a public company and none of the benefit. Right. Anyway, so we've got lots of shareholders. We probably, if I'm being honest, I would love to see we probably have more shareholders than any private company in the world.
Well, I think the number is 500. Like once you have more than 500, you have to file publicly
So
I'm
it's
sure there's
3,000 with reggae around the regulation that we're dealing with, but we have over 8,000, and then we actually just launched a reggae for some growth capital that we wanted to continue to move forward in a really meaningful way around accelerating the growth of the guild. And so we launched one last Friday that's raised over $11 million in like 4.5 days, and
wow.
so that blew up in a really meaningful way. So we're actually probably closer to like that one hasn't closed, so they're not technically investors yet. But when it closes, we'll be probably closer to 16 to 20,000 total retail investors.
Holy smoke. So you guys have to know how to make movies, market movies, and basically run a private equity fund. I mean, 16,000 investors. Like who does that? Do you have a
Goodness.
whole investor relations team?
Sure. Yeah, I mean, we've gotten to where we've built out technology and communication with them in a meaningful way, and so we've learned that industry really, really well, and made sure that we're really compliant with the SEC, and it's been great. But it's also been an incredible enabler for us in that we know how to communicate to our audience. We love our audience, and they love our mission, and we're going to continue to fulfill that mission for them.
But you don't, just one more question on that. So you've got these investors. I'd imagine that altogether they probably own a relatively small slice versus, the original shareholders. But the idea that somebody would come along, whether it's a Disney or an NBCU or someone, and says, "Hey, we want to give you a dump truck full of money to buy this studio." Is that something that you guys have had to face yet? Have you talked about that?
Um, yeah, that's something we haven't had to face, but it's mainly because we've been very clear about our mission from the get go, and so I don't think we're going to have suitors. Would be my guess until they just feel the pain so greatly that they're like, we got to get these guys off our backs. But we'll address that when we get there in terms of how we address that with our shareholders. But the reality is these people are the most mission driven people I've ever seen. You're talking about 8,000 people who invested in a company that was in a lawsuit with Disney just to fight for their rights and for what our mission was to make the world a better place in the entertainment space. And so my guess is, and my hope is that group, as well as, us as founders and the people involved in the company, will be able to continue this mission and won't be swayed by nice fatty paychecks, because I think that would be a very short-sighted way for us, for our company. That's not to say there's anything wrong with people, founders going and doing a quick exit. I have immense respect for people who do. And I think that's perfectly fine. They can take those resources and go do something meaningful with it. But we feel called, and that it's important that not everybody can take that big deal from a big tech company. Otherwise, we all just end up being Amazon. And so for me, I'm looking at it just saying, how do we go and be resilient and disrupt that industry in a meaningful way?
Okay, one more nerdy business question, because I'm just super curious now. When you build out this kind of library over the years, you've got lots of assets, both digital and film and whatnot. Is there like a residual library here, or is the revenue lifespan pretty short? Or like, are you still making money off things you did 1, 2, 5 years ago?
Oh yeah, I mean, that's one of the things that's really compelling about entertainment is they have what's called these 10-year ultimates, where they take revenue in 3-year tranches all the way up through 10 years, and then a 4-year tranche at the end, and you'll have revenues for potentially decades for evergreen content. And that doesn't mean that you're going to have the majority of the revenues. A lot of them are going to come up front, and it kind of trails off over the time period. But you're absolutely going to have residuals and revenues coming for every title for years and years to come.
As long as it doesn't flop. We're talking
That's
about
correct. Even if it flops, there's technically revenues that come in for years and years to come. It just means that you're recouping all your flop costs.
right. Well, Jordan, this was awesome. Where can people find out more about you and Angel?
Yeah, angel.com. Just join at any time. Obviously, most of our content's actually free. We let people watch it for free, and then obviously you can get early access to our content by joining the Angel Guild. But just go to angel.com and start enjoying the incredible TV shows and films. And we're going to release more titles in the next 18 months than we have in the last 6 years combined. So it's going to be really fun.
Awesome. Thanks so much for joining today.
Appreciate it, John. Thank you.